India's exports are rising, the Iran war is leaving a costly economic scar, and the US Federal Reserve faces a major inflation test. Here's what it means for your money. Now, first up, let's talk about India. India's trade deficit narrowed slightly in May, but the bigger story is exports. Engineering goods exports jumped nearly 25%, while petroleum exports surged 55%. That's a sign that India is moving beyond raw materials and climbing the manufacturing value chain. Services exports also generated a $17.7 billion surplus, helping cushion the trade gap. Next, the Iran war. The Strait of Hormuz is reopening, but the damage is already done. Oil prices surged from around $70 to over $100 a barrel during the conflict. That means higher fuel costs, expensive airline tickets, pricier imports, and slower global growth. Economists warn once again about stagflation, which is a mix of weak growth and high inflation. And finally, the US Federal Reserve. New Fed Chair Kevin Warsh faces his first big credibility test as inflation hits 4.2%, that's the highest in more than 3 years. Markets that once expected rate cuts, they are now preparing for possible rate hikes. If borrowing costs stay high, the impact could be felt globally, from stock markets to loans and investment. So in all, India's exports are strengthening, war-driven energy shocks are hitting wallets worldwide, and the fight against inflation is far from over. For more such stories, tune into World Business Watch with me, Kanishka Sarkar, only on WION.